Hey everybody, what's up? Welcome to another episode of Better Future Conversations with your host Mike Sylvester, aka the Financial Jet Li. As always, I'm super excited to continue this journey with you, this journey to a better financial place. We're talking financial literacy, we're talking how to master your monies, we're talking how to achieve your financial goals, including to become financially independent. And in this week's video, I want to talk to you about a very special topic, how to build your credit score. So my friends, if you're moving to the US, if you're living in the US, having a credit score is of critical importance. That can open serious doors for you to help move you closer to your financial dreams, your financial goals. So I want to address basically 6 factors. But before I do so, before I jump into the details, I want to make the point that regardless of what your credit history was back in your home country, when you get here, you're really starting from ground zero. So if you had a very good credit history back home, know that you're starting from ground zero. But of course, having a good credit history will help you to be able to follow some of the same principles that you follow back home and be able to build a good credit history here. If you had a bad credit history back home, then of course there's an opportunity for you to make a clean start. And this video will be of critical importance to you in helping you to focus on some of the factors that you should be mindful about to help you to achieve that goal. So the first factor I want to talk to you about is age of credit or length of credit history. And of course that is very important now. It's a bit of a chicken and egg situation and for the most part, because when you get here, if you apply for a credit card, which of course you need to start building your credit history, more than likely you will get denied. So, so you need a credit card to build your credit history, but when you apply for a credit card, you're going to get denied. So the thing about it is I would submit is that you open 2 accounts. You open a credit account, you open a checking account, and you open a savings account in the bank. You pass your salary through that. And of course, say after a period of 6 months, 8 months, whatever it is, then you could apply for a credit card. Now, you would try to build up your savings, and of course, by putting some money aside, whether it's 10% or whatever you put aside every month. And even after the time, of course, there is no guarantee that the bank will, or the credit card institution would approve a credit card for you. Now, what I would recommend, of course, is that you probably could go into the bank and have a conversation with them. The human touch sometimes is also very important. They might be able to make a case for you. Let them know that, of course, you are in the country. This is, you've been working, your salary been coming to the bank, and you really want to start building your credit history. And of course, they probably start you off on something very small and monitor that over time. The other way you can start building your credit history, of course, is to apply for a secured credit card. And by that I mean you apply for a credit card where you put up some cash as collateral, and they will use that as a basis for giving you a credit card. And of course, if you mess up, they would use the collateral to liquidate the credit. So that's the second way. The third way you can get a credit card or get a start is by becoming an authorized user under someone who already had an established credit history. They can get a credit card for you, and of course you can use that credit card and try to build your credit history over time. Or if you probably was lucky as I was when I came, you could get a credit card from an institution or a credit union and so on that is associated with the institution that you work for. And so I was able to use that to build my credit history. The point I want to make though is that you need to have a start, and the earlier you start, the better. Time is always on your side. Once you start early, and so time is your friend, as they say. So that's the first one. The second factor I want to touch on is credit utilization, and by that I mean the amount of credit that you use relative to your total credit limit. And the companies, of course, credit card companies, banks also will check your credit balance at the end of every cycle, and based on what it is relative to your total credit available, then they will decide if you have a low utilization or high utilization, and so on and so forth. Now, if you have a high utilization, that makes it more difficult for you to build your credit score. And so what you want to do is to try to keep your credit utilization under, say, 10%. So If you have a credit card, for example, of $1,000 as the limit, you try to keep it under $100. It doesn't mean that you cannot use up to the limit every month. What it means is that you have to pay down, your credit balance at the end of every month or every cycle, so that it is less than $100, and that will give you the credit utilization of 10%, assuming that you have a credit limit of $1,000. And this is a good time to segue into the next factor that I want to touch on, which is really payment history. Now, payment history looks at your on-time payment of your credit card, because if you have a default on your credit card, and that of course sends a very bad signal. And so what you have to try to do is try to pay your credit card on time every time. And what I would submit first of all is that you try to pay off the entire balance. But if that is not the case, you at least try to pay down the minimum balance. And to ensure that you do not pay late, I would also submit that you automate at least the minimum payment, so that every cycle they will pull from your checking account or whatever account the minimum payment, and ensure that your payment history remains intact. So that is the third factor that I want to talk to you about. The fourth factor that I want to talk to you about is really total inquiries. And total inquiries is what is called a hard pull on your credit. When I came here, for instance, I went into Macy's, and when I got to the cashier, she said, "Would you like to have a Macy's card?" And I said, "What does that carry?" She said, "Well, if you get a Macy's card, you can get right now you can get 20% discount. That allows you to get discounts over time, whenever you make purchases and so on." So I said, "Yes, go ahead." She ran my details and then came back and said it was declined. And I left Macy's, I went to Sears. The same thing happened. Without even thinking again, I said yes. And they ran my credit and, it was denied. It was not only after I got back to my apartment and I asked one of the persons there. In fact, I asked the leasing agent, the person who had dealt with me when I moved into the apartment. And she said that, you have to be careful because this could have a significant impact on your credit going forward. And I mean, long after I would have checked my credit, I'm talking about a whole year afterwards, those pulls were still on my credit. You have to be very mindful of credit inquiries because they tend to send the signal that you are desperate for credit or that you're really actively seeking credit to be able to deal with some financial issues. So you have to be mindful of that. A lot of companies, for instance, like rental companies, like car companies, if you're buying a car through financing from them, a number of companies would do what is called hard pulls. There are also what is called soft pulls. So, the credit card companies themselves will check your credit, and you will find that, you will get in the mails, offers and so on. Now, that is after you have built up credit over time. So if you have a credit card and you're performing well, they would pull and see that you're demonstrating good credit behavior, and so they will offer you credit cards and so on. So that's another way you can get additional credit cards, which is another factor I want to talk to you about, which is really your total credit mix or your number of accounts. So what you want to do over time is try to build a portfolio of accounts, and you don't really need to have a mortgage or auto loan or so to be able to get a credit score of over 700. In fact, just using one credit card or even a couple of credit cards could get you that. And if you get a good credit score of, say, over 700, that would probably help you. That will help you, not probably. That will help you to get significant rate reductions and so on a mortgage or auto loan. Or if you're having to move, say, apartment to a new apartment building, or take out a new cable account or telephone account, of course, that will help you in the sense that you would not have to put down significant deposits to be able to secure some of these services. And so that is the fifth factor. The last and final factor that I want to talk to you about, which is, of course, a big one as well, is what is called public records or total or judgments. So if you have a judgment in your name, if you have a tax lien, if you have some kind of default judgment against you in the public courts, then credit card companies and banks and so on will view this as very unfavorable, and that would affect your ability to get a credit card or affect your ability to build a good credit score. So you have to try to avoid some of these things and make sure that you keep your record clean, as it were. So these are the factors I want to talk to you about: age of credit, the length of credit history, credit utilization, public records, your number of accounts, total inquiries, and payment history. These are the 6 factors. And so, my friend, before I sign off, I just want to take this opportunity to say how immensely grateful I am to all of you for the continued support for this project. If you're watching this for the very first time, I want you to share it with one of your friends, at least one person in your circle, whether it's a friend, family, sister, brother, uncle, aunt, whoever it is. I also want you to like this video, comment if you have to comment, share this video. Just do whatever it takes, to get this message out there so that we can continue to have an engaging conversation around money. So my friends, join this conversation. Also, remember that I have copies of the Grenadian Dream, a roadmap to a better economic and financial future, which is an integral part of this very important project. So if you want to get your hard copies, of course, you can do so by going to my website, www.betterfutureconversations.com, or you can direct message me on 202-701-8623 and get a copy of the Grenadian Dream. Until next time.